one thing that we love to do here at Benzinga is to talk to executives from publicly traded companies, especially in this industry. Today, we've got a great interview with Nick Sosiak, who is the CFO of Cannara Biotech. Ticker on the TSXV market is LOVE.V. Ticker on the OTCQB market is LOVFF. And the ticker on the Frankfurt Stock Exchange is 8CB. Nick, thank you so much for joining me.
Thank you for having me.
Absolutely. Look, like I mentioned, man, a lot of people focus in this industry, so there's a lot for us to get into and look under the hood. But before we do all that, explain it to me like on five. What is it that your company does?
Absolutely. We're Cannara Biotech. We're a Quebec-based, vertically integrated licensed producer of premium-grade cannabis and derivative products for the Canadian cannabis market. We have actually two owned mega facilities, which span over 1.6 million square feet, focused on cultivation and delivering premium grade cannabis across Canada at a really competitive price.
Now, we mentioned how this is such an interesting market. It has been for years and years and years. How are you able to kind of deliver high-end cannabis at competitive prices while still maintaining your margins and staying profitable?
It's been since 2018 we've been working on creating the Cannara platform, and really we've created two unique characteristics of our Cannara platform that really allow us to achieve what you just asked, right? Delivering premium quality products at affordable prices so we can disrupt the market. And those two things are, one, being based in Quebec. Quebec has the lowest cost of electricity and labor and utilities across the country. And that so happens to be the largest cost inputs of cannabis cultivation. So we are able to create quality cannabis, focus on quality and additional quality metrics that other licensed producers cannot focus on, incur those costs, but leave out with a 35 to 45% gross margin and deliver profit and operating cash flows. The second important thing, like I mentioned, is our two mega facilities. Our recent facility, which we acquired in 2021, we acquired it for $27 million. This facility was built by one of our competitors for over $250 million. So the cost savings of carrying that facility as we turn on and start producing more and more, we're only about 35% of our total output right now. So we've got a long road ahead of continuing scaling at our facility, but having that facility at such a low acquisition cost, again, allows us to deliver those cost advantages.
I love the fact that you mentioned that you have lower electricity and the resources just cost less in the Quebec region, because it's kind of like, hey, the physical cost of goods sold might be the same across the country, but you've got a bit of an advantage to save those basis points there as well. Now, let's talk about your Q3 financials, which showed a 96% increase in revenue year over year and 30% of quarter over quarter. How are you achieving this sort of growth? When did you expect it to kind of level out? Now, I know you mentioned the competitive advantages that you have, but what else is there to the story?
Honestly, we're just getting started. We launched in 2021 in Quebec, the only Quebec in Canada. And we started, we quickly climbed to being third largest producer in that province with an 8.8% market share. Just last year, when we acquired our Valleyfield facility and started producing and scaling it up, we had enough production to start scaling in the rest of the markets of Canada. So about a year and a half ago, we scaled into Ontario, BC, and just in May of 2023, we scaled into Alberta. We're only in those five main provinces right now, as well as Saskatchewan. There's still many markets to go and international markets to explore. But because we focused on quality at affordable prices and really targeting consumer wants in the cannabis market, our products are flying off the shelf. So we're just seeing continuous quarter over quarter market share growth across every market. Alberta in May of 2023, when I launched, I was 0.1% market share. I'm now 2.3% market share in 3 to 4 months since our launch. We've launched over 70 SKUs, unique SKUs in 2023. And just from August in our fiscal 2023, from August till December calendar 2023, I have another 40 SKUs to launch. So what we've done here is really a crawl, walk, run approach. We're really, probably at our running phase right now, but we've taken a much slower approach, focus on building a sustainable business, focus on the quality of product, validate that in the Quebec market, and then start scaling it into other markets. So, expect this quarter over quarter to continue to increase. We're only 35% production capacity right now of our potential output. So and everything's organic. So as soon as I see demand escalating and we don't have enough production, we just turn on a new room and turn on more production, and we don't have to buy cannabis or rely on the market and have that quality inconsistencies that a lot of our peers have. So having that full control, being able to scale market is really the key to us. So we're going to see quarter over quarter growth. And what's really, really interesting is like all up until this year, we've spent very minimal dollars in marketing, to the point where I don't have any in-store display across Canada. So there's absolutely no retail display inside any retail shop in Canada that we've provided. Everything has been organic and word of mouth. And, we still have that toolkit to continue progressing with.
I'm surprised you don't have any fat heads in the retail stores, but I'm sure that'll drive sales when you do roll that out. Something that stuck out to me is that you mentioned you have 70 SKUs at the moment, and I believe you said you're planning on rolling out about 40 additional in the future. How do you make sure that you're not having a surplus in terms of inventory with almost 130 SKUs that might be coming up ahead?
Yeah, so it's really creating our brands and creating the product portfolio within our brands that utilize the full plant. So because we cultivate and we have access from the biomass of the plant, we're able to, the A buds, the top of the plants, the bottom of the plants, we're able to use the entire plant either in dry form or as well before it's harvest, freeze it and use it for extraction and other processes. So we have 3 flagship brands. It's Tribal, Nugs, and Orchid CBD. And we basically, our objective as Cannara is to find genetics in the market. Find unique and exclusive cannabis genetics, and that's what really propels our SKU count. If we do our job well on finding exotic genetics that consumers want and get excited about, well, one genetic can turn into 20 to 30 different SKUs across all different categories. So what's important here and what we're focused on is genetics, and we have a collaboration with Exotic Genetics, a breeder in Washington, who helps us really learn about these exclusive genetics and work with us to really improve and dial in the quality of cannabis that we're looking for. And that's what the results are, a lot of customer appreciation and brand loyalty in cannabis, which is, so far non-existent.
Yeah, I mean, it's so important to just make sure you don't have too much of an inventory, because then that's cash flow and that's opportunity cost that you could be deploying that cash somewhere else. The last one for me, what do you think is so unique about the Canadian cannabis market? And what do you think is kind of like the key to its long-term success? Is it something that the government can do? Is it something that the private sector needs to do? What are your thoughts in terms of unlocking more potential in this space?
Yeah, it's definitely a highly regulated environment. It's extremely competitive. It's cutthroat, right? Everyone's trying to survive right now. They're reducing prices. They're just trying to grab revenues. Cannara, we really built a platform. We're building a sustainable business. It's our 10th quarter of positive adjusted EBITDA. We're positive operating cash flow. We have net income. So we're here to stay. And I think really licensed producers need to focus on the current market, not rely on things to change, right? We need to make your business work in the current market. And then after that, if things change, your business will thrive even more, right? So, if we can operate in this highly regulated environment, I'm excited for excise tax reform. I mean, we're paying 30 to 33% of our total revenues in excise tax. The edible category, lifting the restrictions on edible category, the marketing restrictions. There's definitely a lot I'd like to see in the future, but I'm also excited just to keep it status quo, because we're one of the few ones growing and doing extremely well in this regulated and competitive market. And I'm okay for it to last longer and just continue to thrive in this setting.
Yeah, I feel like the one downside to having such regulation is that you are kind of limited on what you can do and how fast you can do it. But the upside of it is that there are a lot of regulatory things that companies need to pass to make sure you get the best of the best in terms of quality, product, and all that, especially in this type of sector. But Nick, thank you so much for hanging out with me today, man.
Oh, it was a pleasure, Zinad. Thank you very much for having me.
And that's Nick Sosiak, who is the CFO of Cannara Biotech. For all things finance, check out benzinga.com. you.